In this tutorial, we'll cover the financial section of your 409A request form. Let's get started. Before starting this section, please verify that the correct valuation date has been selected. Once you click Begin, you'll provide the company's historical revenue range. When making this selection, make sure to consider revenue figures calculated using accrual basis accounting. Also, exclude any revenues that do not reflect the company's ongoing operations. A few examples of revenues that should be excluded are grant revenues, pilot program revenues, or sale of prototype revenues. Once the appropriate revenue range has been selected, click Next to provide us with your company's current financing status. If it has been indicated that the company is in the process of raising a preferred financing round, you may be prompted to call the Carta Valuations team to discuss the timing of your 409A. Otherwise, you'll move forward with the request. Here, you'll confirm whether the company has had any subsidiaries. Then, click Next to provide us with historical financial information, pulled from your company's income statement or balance sheet. You have the option to integrate your QuickBooks or Xero accounts to autofill some of the following fields, or you may choose to enter the financials manually. Please note that if the company has a wholly owned subsidiary, we'll need to collect consolidated financials. If you choose to enter the financials manually, you'll fill out the company's cash and non-convertible debt balances here. If the company's cash balance has not materially changed between the month end prior to the valuation date and the actual valuation date, you can go ahead and provide the month-end cash balance. However, if the company's cash balance has materially changed since the prior month end due to convertible note financing or equity financing, please provide the balance as of the exact valuation date. The non-convertible debt balance should include long-term debt items such as drawn from lines of credit, shareholder loans, or venture debt. Please exclude items that will likely be forgiven, such as PPP loans or founder loans without repayment terms. Please also exclude items that are likely to be paid off in the next 12 months, such as credit card debt, deferred revenues, deferred taxes or deferred rent, and other current liabilities. Next, select the company's expected cash runway, which represents the time it takes to completely burn the current cash balance without raising further financing. Then, provide the company's historical revenue and EBITDA figures for the last 12 months. EBITDA, or earnings before tax, interest, depreciation, and amortization, is often reflected on the company's income statement as net operating income. Click Next, and you'll be prompted to provide the historical revenue and EBITDA figures for the previous last 12 months prior to the last 12 months. Check the dates above if you are confused. Next, you'll provide the company's revenue and EBITDA projections for the 12-month period following the valuation date, and provide the percentage of that revenue that has already been secured under contract or is in pipeline. Please note that we will need this information in order to continue the request. You'll have the option to provide the forecast model and additional projected financials here. However, it is not required. Next, you'll have the option to provide projections for calendar years following the valuation date. These figures are not required, so if you do not have them on hand, go ahead and move forward with the request. On this page, you'll see a summary of previously submitted numbers. Feel free to override and adjust the figures if anything looks wrong. Now, you have made it through the financial sections of the 409A request form. If you have any questions about this section or need to contact support, navigate to the Help Center in the top right corner. Thanks for watching, and we hope you found it helpful.